following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time once again for the old Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And it's fun to be gathered together once again with the old all-star panel here, starting off with immediately to my left, geographically, if perhaps not politically, we have good old Mr. Seabass himself, Mark Sebastian from OptionPit.com. How are you doing, sir, over in the land of the pit?
Doing great, feeling great. Things could not be better for me right now. The world is my oyster. I'm doing it my way. I got a feeling that everything's going my way. I've got that feeling, I'm hooked on a feeling that I'm in love with me.
Wow, that was so many mixed metaphors there. I'm not sure where to begin. So many mixed references and so many eras of music that you threw into one very jumbled metaphor. It was very impressive.
Genres.
Yeah, it was all over the place. He had some 50s, I think 60s, 80s, 70s, all sorts of fun stuff going on there. Sounds like things are going well at the pit. At top of the show, we'll give you a nice plug, listeners. If you're into all that volatility fun stuff and you want to spend a whole day talking about nothing but volatility, then by all means attend the Option Pit seminar coming up a couple weeks from now on a Saturday.
November
What's the
10th.
date? November 10th. Oh,
November 10th, yeah.
almost a month. 3 weeks from now at the old
register at
SIBO.
optionpit.com/events.
Help the folks at Option Pit out. They need it because, Mark has his therapy and Andrew has the earthquake relief. He's up in Maine, so they need the funds.
If Andrew wants anything besides lobster, I have to fund it. So.
Speaking of Andrew, he's not on the show. Hopefully he emerged unscathed from the great quake of Maine.
Oh, he's doing fine. He and I were wrangling over who got to go on today, and I demanded.
I wasn't sure if he was digging out from the rubble as we speak. All right, also joining us, listeners, holding down the Options Express hot seat. He is returning for his second appearance on the old program. He is Dave Videmanis from Options Express. Dave, welcome back to the show, sir.
Howdy, everyone.
Are you excited to be back on the old program?
Yeah, very much so. I couldn't wait. Stayed up all last night thinking about it.
They kind of threw you into the fire last time. At least this time you had a little bit more prep, I'm hoping. I'm hoping John and Sean didn't say 20 minutes ago, hey, time to hop on the show.
Yeah, that's pretty much how things work around here.
A well-oiled machine.
Not a great deal of heads up.
A well-oiled machine over at OX.
Yeah, John's got to go take care of a Groupon stock problem.
Yeah.
Oh, he's had that for a while. It just keeps growing and growing.
And listeners will probably be joined a little bit later by good old Uncle Mike Tusaw beaming in live from good old St. Charles, Illinois. But now, with the band mostly assembled, we're going to dive right into the trading block.
The trading block.
All right, listeners, welcome to the trading block, and I don't know where to begin today. Today, really, we have an embarrassment of riches to discuss on the old program. Maybe we'll just do
Why? Did I miss something?
A full trading block episode. Yeah, nothing really happening today, just some little stuff going on. Some little companies you may or may not have heard of announcing. Of course, we talked about on the show and on the episodes leading up to today that today is in many senses earnings-palooza, with a lot of major names announcing after the bell today. We were planning to discuss a lot of these names live during the show, but Google decided they had other plans. And
I don't think Google decided that they had other plans.
Exactly.
I think R.R. Donnelly decided that Google had other plans.
What just a comedy of errors on their part. Not only did they release them early, but they're atrocious on top of it, so it's a double whammy.
That's the real problem is, I mean, they wouldn't have been able to really defend themselves that well, but the fact that these got released and it literally said Larry's statement, quote here when the earnings got released. So they got released before they could even issue any kind of damage control and talk about their earnings. So and so far away from the conference call. But the good news is I almost wish stuff like this would happen more often, because it actually allowed the retail public to take care of business on an earnings announcement today.
Well, there is a plus and minus to that, of course, and the thing can get exacerbated because of all the contingency and stop orders being triggered. Yeah. And that we saw that cascading snowball effect.
My mom grounded me for good.
You didn't see too many trades going off between 730 and 700, let me tell you.
No.
That was just straight drop in a matter of 1 minute. So if you had a stop order there at 720 or thereabouts, I'm sure you got filled somewhere around 700 or in the mid 690s or something like that.
Hey,
so,
you know what?
Not always good.
That's better than the gap open that you would deal with the next day.
Yeah, there's certainly pluses and minuses to all of this. Of course, the people who were planning to put their positions on today going into the announcement, of course, they missed their shot, and they watched it all unfold. But on the flip side, you're right, Mark, it did occur in a more liquid environment than it would traditionally occur in the after hours when we see these wild swings. So this is actually an interesting test case in a lot of different ways to look at it, of a major name like this announcing in the middle of an actually liquid trading environment and how it would hold up.
And the thing was, it was interesting. I had a couple clients say, hey, Mark, what do you think? Should I hang on? I'm short. Should I hang on or should I get out? And I said, the market is fully open. There's a liquid environment. We're down 60. Any selling off is being done right now. So, it's probably only going to go up from here. I would not try and push this. This isn't like an open where, it's got to print and then move around, then who knows. This is 2:30 in the afternoon, and there's been enough time to digest, and we already kind of know where it is. So hopefully people kind of had that same approach.
Yeah, this was an interesting one, and just a fun one to watch unfold, or maybe fun's not the right word, but I think interesting certainly applies here to watching this one. Of course, Google wasn't the only name today to come into the mix. We talked about today being earnings-palooza, a lot of names announcing right now as we speak, live during the old trading block, starting off with Chipotle, my former stealth Apple.
CMG.
Seems like every time they announce, they get farther and farther away from that stealth Apple status. Today, closing at 285, almost 286. Trading now in the after hours right now, off about 30-odd handles at 254. Yeah. I know, it's funny. I was looking at this one pretty hard today on some different ways to get in, and I decided I wanted nothing to do with any sort of premium selling in Chipotle right now. And I'm very thankful I made that decision, because this one is just off to the races.
Does not work. All right? Let me get this through some of our very thick-headed listeners. Statistically, all right, every stat out there basically says if premium selling works, it barely works, and when it doesn't work, it really doesn't work. the risk reward of these double, I see these people come in, oh, I've got this double calendar, or I've got this at the money calendar, or I'm trying to take advantage of the premium collapse. You know why you're not going to take advantage of the premium collapse? Something called gamma, folks. And when vol drops, gamma explodes. And that huge tent that you thought you had is gone, and so is your profit. Over the last 10 years, every piece of evidence says that long primo into earnings outperforms short premium. Neither really wins, but long premium kicks the bananas out of short premium. So if you get one little thing out of this, all right, and I love you all, folks, all right, I speak to you sternly out of love, all right, it's quit it with the blanket calendar buying into earnings. Now, I'm not saying there aren't times where it makes sense. There are. But quit it with this weird blanket, I'm going to buy calendars in every earnings, because you will lose. And you won't just lose, you're going to lose bad. Thank you.
That's the soapbox for today, huh? I think it's kind of an analogous situation to what you might see, what we've talked about a number of times, S&P put spread versus VIX call spread. S&P put spread generally outperforms in the most part, but in those crazy scenarios like when the earnings outperforms or when the market drops, the VIX upside so dramatically outperforms that it tends to weigh the scales in its favor over the long term. Same thing with, I think, being long premium. 9 times out of 10, that trade's not probably going to go into your favor, but the handful of times that it does, it's a dramatic win. So it's one of those kind of stake management type scenarios. We have to be able to continually establish the right positions in order to get that one time you really knock it out of the park.
Yeah, there's no inherent advantage to buying or selling. I agree with Mark in that going in. I typically just view earnings as a royal pain in the butt with what I do. But yeah, if you're going to be selling premium, hopefully you don't enjoy sleep that much.
Hey, Mike.
How are you?
Good to hear your voice.
Yeah, good to be here. Good to be heard.
Mark, if you have any links to those studies that might be interesting to our listeners, then send them over and we'll post them in the show notes.
There are a couple of Goldman studies that have been put out by John Marshall and the weekly option watch people. I'll be happy to send those along.
Because we get people writing in all the time asking variations on that question. Long, short, are there any sort of detailed metrics on which outperforms?
Detailed metrics say that straight long versus straight short, straight long premium wins still is probably a net loser. But the key is to be right on direction, according to Goldman Sachs.
Oh, is that all?
No, I know. Yeah, that's a shocker. Now, you're making reference to just earnings plays, not in general, correct?
Yeah, just earnings plays.
Got it.
Yeah, of course, speaking of earnings, there were some other names coming out today. We joked about AMD last week. Speaking of premium buying, I did pick up an El Cheapo flyer strangle out in AMD. I couldn't resist the 2.5-3 strangle going into today. It looks like it's sitting there right now, but it was just one of those ones where it was too tempting to me. We also saw Chipotle, Mike. We just talked about that selling off hard. Of course, Google. Good old Southwest also reporting right now. Good old Love selling off.
I love that stuff.
Actually, I'm sorry. Love's still unched, so either the numbers are pretty meager or they haven't really reported yet. Same thing with Microsoft selling off a wee bit. Microsoft also reporting after the close today. We've typically seen Microsoft I always joke about them being a resounding meh going into earnings, and it looks like this one looks like about the same. Not too much going on here in the after hours. Maybe it might sell off $1. It's on about 70 cents now. That one, another one where this kind of gets into that same argument of, long or short premium. We saw this one. It seems like the straddle performed just about right. Chipotle, the straddle outperformed. So if you were long that straddle, you did well. This one, if you were long it in Microsoft, you probably didn't do that great. So, this is kind of that example of most times you're probably just going to be decayed to death a little bit, small pieces at a time, versus that one huge, massive winner in Chipotle. But, of course, the outlay for a straddle and something like Chipotle is pretty substantial. Let's look at where CMG went out today prior to earnings and what that straddle was trading. Obviously, no matter where it was trading, it was a winner. And for some reason, my screen is deciding to be
about
slow.
$25.
$25. So yeah, so you're looking at least a 10 handle probably 5 to 10 handle winner on that one when all is said and done, given Chipotle. So yeah, that's one of those scenarios Mark was talking about where you do win, but how many times you get a nickel and dime to death or 1,000 cuts before you get that $5 winner? So yeah, typically that's like I always said, very nuanced time to be trading around earnings. A fun one, an interesting one, but the people who come out and just blast away at premium, probably not the best trade ever. Also, people who come out and just load up on front month straddles or whatever the case may be going into earnings, or upside calls. That's always my favorite. Also, not exactly a winning strategy either. Whichever way you're going, either if you're going to go short, obviously we want you to have risk mitigated types of trades so you don't have just naked shorts. Same thing on the long side. Mitigate your premium risk, hopefully, with some verticals or some other types of spreads, maybe ratios, whatever the case may be. Either way, whichever way you're positioning, you want to make sure you mitigate either your premium risk or your net positional risk using many of the strategies we talked about here on the show. Also, coming up right now, we have Verizon reporting after the close. They closed it. Another one looks like they're about unched on the day. And I see Zynga is next week. I was going to give a shout out to good old Andrew,
wow.
But yeah. Zynga is next week, so we can't mock Andrew on the old program right now. Oh, Nokia, another almost sub-optionable name at this point.
Yeah,
also coming out.
We should develop the Andrew Grigas. They call it the G&G portfolio, and then we just place it out there, and then everyone could just short it and make a lot of money.
Once again, selling your old lobster under the bus. But yes, he is a fan of these names. I think to be charitable, he was a fan of them when they were not sub-optionable, as they almost are now.
I agree. Andrew's not a Zynga guy anymore. So. And actually, he's a really good trader and actually does a decent job of picking stuff. It's just he has a couple that'll get behind, and when he misses, he misses.
He's the reverse side of that long premium trade we're just talking about. When you hit it big. When he misses, he swings for the fences.
That would make sense for him being the degenerate premium buyer that he is.
He is. And speaking of buying premium and all that doing stuff, Uncle Mike, were you doing anything today with Apple taking it on the chin post GOOG here?
No, nothing yet. Still just basically waiting it out. We'll recollar this and get back after it. It's not letting me out.
Yeah, Apple just clinging to you for dear life. I know you were at the 670 strike. You were going to roll down, or is that next week after expiration you're going to roll down, you were saying?
Yeah, tomorrow we'll have something rolled out. Some type of another roll in place.
Where you thinking? You thinking covered call 6.5? Where are you thinking?
Something like that, yeah.
Uh-oh. It's getting aggressive, getting out of 6.5. You're like, if they're not going to let me out at 690, at least let me out at 6.5.
Yeah. I mean, it's one where even if I have to get net debits on these collars right now, I'm not blowing this lead. I blew a little bit of a lead by having all the time decay socked away when it was up at 700 and not getting out when it was at 700, but I'm not blowing this lead.
Of course, we still have the iPad mini next week. That could function as a mini kind of pre-earnings announcement. We might see a little bit of bump out of that. Or, of course, traditionally it has rallied into earnings. We haven't exactly seen that happen this quarter. It's probably one of the first quarters in recent memory I can remember where Apple hasn't had that surge, that pre-earnings surge that everyone loves to trade. So hasn't exactly been looks like most of the odds were in your favor prior to this past week or so when Apple seems to just have taken it on the chin. Of course, we'll see next week. Are you a big iPad mini? Are you excited, Uncle Mike, or you just think this is another ho-hum product?
I think it's another ho-hum product. I mean, I think that it's starting to go downward with things right now. It's still we might get a little bit of a pop, but how many times can you reformat different versions of the same stuff? You know, I mean, we'll see. I could be wrong, but I'm not extremely excited about it right now.
One thing I don't get, not to get too far into the weeds on the Apple product line, but really quickly, they announced last month at their last announcement, whenever it was, a $300 iPod Touch. Now, to me, where does that leave room for a 7-inch iPad mini? What are you going to price it at? $300? Then that was the whole point, is make a cheaper iPad.
Well, you know what they should do? They should have an iPad that has 3G, an iPod that has 3G technology. What do you think? Or 4G technology.
There we go. Just a data device. I like. Well, that's what the iPad is in many ways. It's just a big iPod.
That's what an iPhone is. I mean, there is no reason for the iPad mini. I mean, it is the biggest waste. And you know, Mike, you just made an incredible statement, and it's damning not only of Microsoft, but it's also damning of Apple. All right? How many times can they reformat the same thing? All right? And they're starting to run into the same problem that Microsoft had for years and years and years.
Well, so, it's like in a TV show. Three's Company. They had some TV show once where in the early days of Three's Company where they were trying to sneak a cat into their apartment or something like that. And then towards the end of the run of the sitcom, and they're trying to keep it away from Mr. Roper. And then towards the end, when Mr. Furley was the landlord, they had another episode to where they were trying to sneak a dog in. It's been done, and it's my take on is that they're starting to run out of ideas, and it's been a great run, but it's coming to an end, I think.
But, Uncle Mike, I do agree with what you're saying to a degree, and perhaps less so with Mark. But, because I think there is a need for something to be in that smaller device category, because otherwise Amazon and what Google are coming out with will start to slowly erode at them. So if they could come out with something that's iPad quality that is in that $200 to $300 price range, you're locking the door on pretty much all tablets will be Apple going forward. So I think there's an idea and there's a reason for that. Of course, how that $300 iPod Touch fits. So they're going to come out tomorrow or whenever it is next week, announce, let's say, a 7-inch iPad mini for $300 some odd, and then who's going to buy the stupid Touch? And one of those two doesn't make sense. I don't know what they're doing there. So perhaps that's me. Perhaps there's some grand strategy I'm missing, but it just doesn't appear to be the case. Anything else catching anyone's eye here before we leap into the odd block?
Not in particular.
We'll keep an eye.
Pile of Google 800s were traded about an hour before the earnings. By the way,
really, I'm guessing they were. I'm guessing they were sales.
We're guessing so. Yes, that was caught on the desk. And we're all scratching our heads, saying, "Hey, look at that huge number!" And an hour later, lo and behold,
of course, there's a ton of open interest there. So this guy obviously could have been closing. Either way, it's still dubious, even if he's closing along. Yeah.
We'll find out tomorrow. We'll see what the open interest is.
It's interesting. We yesterday we had the VIX up and the market up. Today we've got the market down and the VIX down.
Good old VIX, that phenomenal hedge, 1-to-1 as they like to market it.
Yeah.
Load up on your VIX hedges, everybody.
Now, there's another thing that's catching my eye today. I know before we move on, FXI, it's a China ETF. That's one that we've had exposure to for a while that we've been doing collars on. And right now, basically about 2 months ago, we kind of took a lot of the protection off because we were around the 32 level. And it was one where it was a small enough position to where we were justified in doing so. But this is an example of in collaring, and I just want to kind of go through this a little bit because this is something that it's been working for a while just to share with the audience. There's a point where it makes sense to collar, and there's a point where it does not. What we have been doing on FXI for a while now, it's not a huge holding, but it is another one of our holdings. We've been doing collars on it, and then as the stock goes down, we take profits on the puts, and then we either recollar it or buy more shares, or the stock goes higher. We wait for it to come down, and we've been playing with this for probably about 6 to 8 months now, and probably around the 32 level, not exactly there, but around that level, we basically made the decision that this is just going to be a holding, and we'll monitor it in case it goes below 32 again, because we viewed that as support. We were in it. And this is just an example, folks, of where if you do this right and you can take advantage of profits from the puts, this can benefit for you. So if you look at a chart of FXI, it's been doing pretty well lately. Now is the time to where we're going to look to recollar it again because we've made money off of playing the options on it, managing the risk. It's back to around the levels with which we got into it, but we're profitable because of the fact that we were using the collar. This is something that I think if you're going to trade the collar the way with which we do, you need to be nimble in what you're doing, and that's how we've been doing it.
I'm looking at this chart here, and it looks like since May, this name has pretty much been ideal for collaring. It's been vacillating from about the mid-30s down to 32 level and then bouncing back up. So if you've been, taking the profits on those puts and then riding the calls on the upside and vice versa, you've done fairly well. Whereas if you're just the long underlying holder, you've had essentially a wasted 6 months. So this is a great example of a name that seems very well suited for collaring, except perhaps maybe for the last few months when it's been essentially straight up. So good timing on your part there, sir.
Typically, it's not. We don't catch it that much, but occasionally we get one right.
And what was it that drew your eye to this name?
Well, I'm bullish on China. I think that over the long term that it's kind of like gold, silver. I do think that China does in time. Now, I'm not talking about the next 6 to 12 months by any means at all, but this is kind of I have a similar view on FXI as I do with gold, silver, various natural resources, commodities, and that type of thing. I think this is a good way to be long equity in general. This is an ETF. It tracks 25 Chinese companies, so it's difficult to get a true feel of what China's actually doing, but this is probably your next best thing in that it fits the mold as something. It's a longer term holding, but in the meantime, you can have 80 to 90% of the asset protected through options, and not just when I feel like buying an option, I sell the stock. Not that type of option. Actual real puts are being done with this, and it's worked out pretty well. Now, it has a dividend on it, so that does make you're going to have to do some debit collars on it, but I'm fine with that and when we're doing it.
That might be the statement of the show. I'm bullish on China, says Uncle Mike.
I'm bullish, baby.
I like it. All right, with that thought, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the old odd block. This is, of course, where we pick out the interesting and or unusual options activity. Going to kick things off with good old McGraw-Hill, ticker symbol MHP. I like this one for a couple of reasons, primarily because it shows just how deep our options insider writers go, and they ferret this stuff out, and perhaps a little bit more than the surface stuff you'll see on some other sites. We saw McGraw-Hill, of course, closing today at $55.80, up about fractionally on the day. This is a name normally wouldn't make it onto our radar, only does about 450 odd contracts a day, but today it did well over 10,000, nearly 11,000. Pretty much all of that was in one whopping call trade. We saw the May 55 calls get scooped up, lifting the offer 10,000 times for $4.20. Now, on the surface, this apparently looks like a very, very bullish trade. You'd think, oh, wow, this guy's really looking for a massive upside pop here in McGraw-Hill. And looking at the chart, that doesn't seem to be too irrational of a bet. But, of course, you dig a little deeper and you find this actually was done with stock. And he sold 500,000 shares of McGraw-Hill stock against this trade. So now you're looking at this guy, and all of a sudden you realize this is actually not a straight-up bullish play, but actually a long vol play and a net delta neutral or short delta trade. And on the whole, long vol, short deltas, that, of course, is a bearish trade, a bearish bet here on good old MHP. So an interesting trade, someone obviously looking for MHP to retrace and probably retrace somewhat aggressively to get that nice vol pop he's been looking for here in these trades. McGraw-Hill also, of course, the licensor of some of the products you love to trade, like SPX over there at the SIBO. So an interesting name to bring up in a number of ways. And next up, before we dive into our next one here, our roll on Sprint, I know, Sebastian, you had some activity that caught your eye over there on Facebook. Some sizable in the money puts.
Yeah, it was interesting. A trader came in around 10:20 this morning. Right when did Google's earnings accidentally get released? Right around 10:20.
About that, yeah.
Yeah. So interestingly, or not interestingly, you decide. A stock that is highly correlated to Google, Facebook, saw a trader come in and buy about 17,000 of the November 22 puts, paying about $3.10, and they went out about $3.50. My guess is that was 100% a delta chase. And the guy was trying to get short deltas. And it was a good trade because you know what happened? The stock dropped. So buying in the money puts can be an excellent way to get short deltas on a stock like Facebook without paying a lot, especially when it's especially when you can buy something for like $3. and that was the one that we caught here.
Go. Amazing that, you buy in the money puts and the stock drops and it works out. Amazing how that timing works. This shows there are many different ways to get long and short these underlyings without having to sling the underlying itself. Next up, we're going to skip over Sprint. We had a big roll in Sprint and going to go straight over to Hertz Global, ticker symbol HTZ. This one, of course, Hertz, the holding company for Hertz and the rental car company and all that fun stuff, closed today at $14.73, fractionally unched on the day. It's a name that does usually about 6,000 contracts a day. We saw nearly 50,000 going up today. If you haven't been following what's been going on in HTZ of late, they've been having an ongoing battle with the FTC about their acquisition of Dollar Thrifty Automotive Group, of course, DTG. And this one got extended this morning due to some recent developments. And so someone decided to come in and gobble up some strangles, pick up some vol, pick up some strangles here on good old HTC. They came, not HTC, HTZ. And they came in and picked up the DC-10 13 strangle about 7,000 times, lifting the offer for about $2.10, $2.15. Now, given open interest, this could be a closing trade. Either way, either they're buying to close or they're buying outright. Either way, this expresses their viewpoint here on what's going on with good old HTZ wanting to put on a little vol or close a short vol position in this one, perhaps not thinking that their earlier bet was as certain as they may have thought, given all the uncertainty here in good old Hertz. And that's going to do it here for the old odd block today. And now we're going to dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is where Dave gets to take the reins of the show, so listeners, be afraid. Be very afraid. Dave, what do you have in store for us today?
Well, we see some activity in the VIX finally, in the call options. Huge buyer all week coming in there, obviously anticipating something to happen in November. Buying the 45s, 50s, and November 60 calls. Each day has placed, I don't know, today's volume I think was around 15,000. All one player. Here it's from Barclays, but whether that matters, I don't know, but we're finally getting some action on the call side in the VIX. Hopefully, they're right, because we could
I
definitely.
can tell you why it's from Barclays.
Why is that?
Well, who runs the VXX? And
Good old
XIV,
ETP land.
All the other ETNs that are VIX related.
So you think it's some sort of hedge?
It's 100% a hedge.
Well, that's not good. Or good for them, I guess. Great thing.
What are you talking about? I'll let you finish. Then I'll talk about why all this VIX buying is a good thing.
Very good. Thank you. I appreciate it. And as far as anything else, it's been a fairly quiet week thus far. I think some of the commodities heating up. Maybe natural gas is getting a lot of activity. Grains are moving sideways. Good for day trading. And on a personal observation, I have seen the pharmas getting a lot of play, especially a lot of the biotechs. Some recent approvals by the FDA has heated up that sector, that's for sure. And what else has been getting some play? The softs have been getting quite a bit of play. Cocoa, coffee, and sugar, all on the downside, but we have seen increased volatility and action in those commodities. Surprisingly, the currencies haven't done much of anything. Not much volume in there, even though the euro has risen about 10 cents on that from a low of like 122 to 131. And I'm surprised that the weaker dollar isn't affecting these commodities a little bit more, but it is what it is. And what did we see? The bonds, interest rate futures, very schizophrenic. Up a point one day, down a point the next. So again, maybe a better trading market than an investing market right now.
And that's certainly the case. And of course, seeing that with all our friends over in VIX land hedging to the upside. We talked about this quite a bit on the show in the past. These ETPs and this universe of ETPs that has sprung up around products like VIX, Dave, tends to generate a lot of this type of activity because these guys, for the most part, depending on what types of products they're structured, but a lot of them are just generally short tons of their product, and so they need to hedge somewhere. So they come into products like VIX. Actually, I kind of agree with Mark. That's a good thing. That shows that they're at least attempting to structure their products in some way, shape, or form that is rational.
Yeah, and I was on Bloomberg yesterday, and one of the comments I was making, and clearly the guy who spoke after me didn't get what I was talking about, but I was ready to reach through the screen and choke him, but I couldn't. But one of the things is that all this crazy, you don't buy, if you think the VIX is going to explode, you don't buy the 60 calls, all right? You buy the 30 calls. Or you buy the 20 calls. If you are long and don't think that much is going to happen, all right, but want to protect yourself, that is when you buy VIX calls and way out of the money calls on VIX. It makes a ton of sense to do it at those levels, all right? So really the key is to understanding options is, when you see people buying downside puts in the S&Ps or upside calls in VIX, that's a bullish sign more often than not. Now, when you see people buying at the money puts or in the money puts in S&Ps or at the money calls or in the money calls in VIX, that is actually a lot more bearish than this way out of the money junk. All that they were doing is essentially, do you know what a unit is, David?
Go, please explain.
All right, a unit is an option that is super, super, super inexpensive, where its Greeks are unpredictable because when it takes part in a black swan event, the value explodes so exponentially that there's no way you could possibly price that. They're sometimes called the fat tail purchase. And that's really all VIX upside stuff was. And so that's why I think it's bullish.
This makes perfect sense to me.
The old market maker term, units. Got to be long units. Got to be short units. Good stuff. Thank you for that, Dave. And I think now, and of course, Mr. Sebas, thank you for pontificating as you are wont to do on the old VIX. But now we're going to dive right into the mailbag and give you a chance, the listener at home, to do a little pontificating of your own.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, we don't get to use that funky drop often enough. But it is time for the old mail block. And kicking things off, we have an email from Ted out of Washington. He writes, I know you guys have touched on this a long time ago, but I can't find the episode. I'm not sure if there ever was an answer. My question is, how do you execute a ratio spread using extend? I've been trying all morning to execute a simple 1x2 put spread, buying 1, selling 2 all morning, yet when I select put spread from the extend drop-down menu, in the order ticket, it defaults to having the legs be the same size. Whenever I try to change the size of one leg, it automatically adjusts the other one. None of the other selections in the drop-down menu seem to work, and I don't see a selection for ratio spread. Is there a way to do this? If not, can OX please add a drop-down for ratio spreads in Extend? Thanks. Been a fan of the show since it launched, and an OX customer for about a year, mostly because of this show. Well, thank you there, Ted, for listening to the show and for, of course, sending some love out to our friends over at OX. And speaking of love, Dave, this one's right up your alley here. I actually have encountered this myself in the past with Extend, trying to enter a ratio and being flummoxed and not being able to find a way to do it. So is there some secret sauce that Ted and I are just missing, or is it something that needs to be added in down the road?
No, I was actually able to replicate the order in just the straight put spread. form. I actually tried it and it worked for me. But, if you ever have any issues or any problems, please call us at that time, because there will be occasionally times where there may be a bug or a glitch, and we need to be aware of that at the time, so we can go into your account and look and to see if there is indeed a problem at that time. But unfortunately, I was not able to replicate it.
Oh, so you were able to do ratios just with the straight up put spread or call spread option?
Absolutely.
Interesting.
Sure.
I know we've received this feedback a lot in the past, so I'm assuming it might be an intermittent thing then. Whatever it is.
It may be a bug. It may be an intermittent thing. So please give us a call when this does happen so we can identify it.
I haven't done a ratio in OX in a while, but I'm trying to think the last time I did get it to work. And I think I might have done what you said, which is kind of get out of it and get back in. And then I think it seemed to let me do the ratio. I'm trying to remember what exact steps I took. But I remember when I first tried to do it, it did kick it back. So there was an issue there where we kept trying to do just the same, every leg the same. And that obviously is not desirable in a ratio. So Ted, maybe try that. Try canceling out of it and getting back in. Obviously, it's not ideal, but if you can do that in a couple of quick seconds, that can at least help get the trade executed. Worst case, you can always use the website.
If you are unable to, please do not hesitate to call. We're always here.
But it might be a good thing to note for the developers there to maybe put that in the drop down.
Sent it to issues. Thank you.
So on a related one, since we're hitting on
take these things seriously.
There we go. Well, and on a related issue, since we are hitting on extend functionality, we'll run through this one really quick. Similar question we got a few weeks back. I thought I'd throw it in because it is so timely in this sense. This guy writes in email from Finn. He writes, I know Mark L loves iron butterflies, and yes, I do, Finn. And he writes, how do I trade those using extend? I don't see an option for those in the trade ticket. So, Dave, same kind of question. How does someone get to one of those when they're not in the drop down? Do you have to just do like something like Iron Condor and then set up the extra leg or take it out?
Well, you can either subtract or add a leg, but it should be in the drop down again. I don't know if you're running the latest version, perhaps. Maybe you can update your, make sure you have the latest extend version, because again, there is a drop down for that under the trade ticket.
There is, because after this email came in, I fired up extend today just to check to see if it was there. I didn't see Iron Fly. I saw Iron Condor. Maybe I have an old version too. I don't know, but I didn't see it as of this morning when I was looking. So perhaps another one we put in the folder.
Everybody update their extend.
There we go. Everyone update.
Always run the latest version,
and all your problems will be fixed. Well, thank you for that question as well, there, Finn. Next up, we have an email from Todd in Minnesota. He writes, "Hi guys, love the show." So thanks, Todd, for all that love. He writes, "A question for the listener's mail segment. I'd be honored if you read it. What's the most effective way for a retail investor to hedge an X% decline in the overall market? Some guesses: 1, buy a back month vertical spread or a single long put on SPY and let simmer. Number 2, buy a vertical call spread on VIX and manage it closely. 3, none of the above." He writes, "By the way, if you're going to continue reading questions from Options Voodoo, can you do us all a favor and refer to him as Options Something Do? Mr. Seabass should get the reference. Keep up the good work, Todd in Minnesota." So first off, Mr. Seabass, do you get that reference?
Options Something Do?
Yes.
I think it's doo-doo.
He specifically mentions you in his email here, so I'm assuming you would know that.
I'm not 100% certain what that means. I got to think about it.
But yes, he mentions that for you. And then I like this question. This is a good one. I think I kind of take issue a little bit with the way he structured it, because I don't think it's an either or. I kind of like his first suggestion, buy the back month vertical put spread. But then how come you can't manage that one closely too? Because that's what we've always said on this show. If you're going to buy something, what does Andrew always say? Do stuff. You don't just because you have a vertical call spread in VIX. Yeah, you want to manage that closely. But if you have a put spread in VIX, a put spread in SPY, I wouldn't let it simmer. I would manage that closely too. So I put my money on number 1, but with a tweak, and say manage it closely. I'm still not a huge fan. I know you like you like VIX for various uses, or Mr. Sebastian, but unless it's one of these very dire scenarios, these VIX upsides and even VIX verticals,
you really have to be smart with how you trade.
They're a difficult one. I mean, I know VIX verticals are attractive because you can get into them because that upside skew is so ridiculously bid up. You can get into them at more attractive levels, so that's a good thing. But on the whole, because they're so bid up, you need substantial movements to have these things really work in your favor. And,
the VIX call spreads can be a little bit of tricky. The key is to really wait for that skew to get bid, then get into something. And so if you monitor the skew, monitor the vol, so look at VVIX, and are monitoring the spread between the futures and the cash, then you could put yourself in some really decent hedged positions. But if you're not careful, VIX will eat your lunch. It will just crush you. So you really have to know what you're doing.
Yeah, be cognizant. Go ahead, Mike.
Yeah, I was going to say, and also I think it depends on what you're actually hedging. If you're hedging long-term stock market holdings that you plan on holding for the next 10 to 20 years, I'd highly recommend going with something on the SPY over the VIX, just because of the fact that the inverse relationship that oftentimes exists between the VIX and the S&P 500 doesn't always exist. It is possible, and I know this might sound shocking, it is possible for the market to go up and the VIX to go up at the same time, and vice versa, and the market to go down and the VIX to go down at the same time. It's never an exact thing. So for hedging substantial portions of your portfolio that you have as a long-term holding, I think that using the VIX as a hedge is like buying car insurance on your home.
Yeah, I think it's interesting. I think calling VIX a straight up hedge, I think kind of oversells it a little bit. I think it really should be referred to more as an extreme hedge. The S&P is...
I think it's an asset class. It's just an alternative asset class.
And it outperforms in those very extreme scenarios, but all those other times it's probably going to underperform a more direct hedge. And a lot of studies do show that. So if you want, for those extreme moments when you're afraid the S&P is not going to do it for you, then you might want to add a little bit of VIX. But having VIX on its own just as your total hedge, it's really going to only perform for you in those very, very unique scenarios. I'm not sure if that really is an ideal hedge unless you're really concerned about, I hate the term, but a black swan type event in the near term. Then VIX could be your option. But, aside from that, I don't tend to go to VIX very often unless, like Mark said, in one of those scenarios where like Apple gets the same way, where that upside gets so bit out of control that you can leg into verticals for paltry amounts. Then it can put on some really, really cheap specs on a black swan type extreme event. Then that's not a bad trade. But otherwise, I tend to lean towards...
Yeah, that's a trade. It's not a hedge. It's a different thing.
Yeah, I agree.
Different animal.
I agree. So I think, Dave, you want to weigh in on this before we close out the old mailbag?
No, I think you could do some debit spreads on them, farther out. You can get in fairly, 2-point spread. It looks like you can get in for, hopefully about 40 cents. That's another alternative.
So VIX debit spreads, huh?
Mm-hmm.
We have another we have another email here from Mr. Chips. I think we're getting along, so we'll save this one for next time. Thank you to all of you who wrote in, Todd and Finn, and what do we have here? And Ted, Ted and Finn. A very tea-heavy mail block, but we'll get more of you guys on next week, and now we're going to dive right into Around the Block.
Around the Block.
All right, and those car horns mean it's time for the final segment of the day. And let's going to do a quick recap here on some of our earnings before we leave for the afternoon. Some of the earnings coming out. AMD pretty much sitting there, not moving. Looks like my flyer Strangle's not moving either. So no love on my long premium on that one, though I kind of assumed that one. That was more of a little silly fun trade. CMG really taking it on the teeth right now, down about 35, 36 handles right now in the after hours. So no love for the foil-wrapped burritos over there. GOOG still trading in the after hours. Obviously, the biggest damage was done during the day, but GOOG trading around, actually up about 5 points in the after hours, around 700.
Yeah, don't be surprised to see that one sneak higher tomorrow as people digest this a little further and if they missed earnings because they're spending a lot on trying to grow business, I think that's going to be a lot more than if they missed because there was a revenue problem. And my understanding is that it was not a revenue problem, but I could be wrong.
It was Motorola that really, I think, weighed on their earnings. Motorola can't get out of its own way in a lot of ways. They have that set-top box division that is dying. They have their handsets that they make some good handsets, but they just can't really sell enough of them to really make too much of a profit on those. So, except for Apple and Samsung, no one really seems to be making money in the mobile handset market right now. Certainly Motorola, not one of them. It's certainly not one of the reasons why Google has slashed jobs and slash the devices coming out of Motorola, because they were putting out a device every month, and none of them were making money. It didn't really make any sense. So Motorola really being the albatross around the neck of Google in this.
I'm looking forward to the Razr Smart.
Yeah, I like Motorola phones. For whatever reason, they're just not, the margins aren't good, or they're not selling enough, or probably a little bit of both. But regardless, they kind of...
I would love it if they did that. Like a cool Razr smartphone. People would love that, actually.
Well, they have it. They have the Razr Max now. They have some Razr HD.
Yeah, but I think they need to do something like a real, like, the new Razr, blah, 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 like a real campaign.
The new Razr, blah, blah, blah. You heard it first.
Profit margins in
blah,
the
blah, blah, a real campaign. End of story.
There we go. Done. All their woes fixed.
Partner up with Gillette. The Razr meets the Razr.
Oh, free Mach 3 with every handset you buy.
Yes.
Done and done. And Dave, I didn't mean to cut you off there. What were you saying, Dave?
No, I said actually brother-in-law is engineer for Motorola. The profit margins in the high-end phones only. So that's what they need to develop, I think, given the highest tier.
That seems to be part of their problem. You know, they make decent money on the handsets that Verizon pushes, like the Razr Max and the other ones, but all the rest of them that are kind of mid-range and below, there's no money in them. They make too many of those. So yeah, it's probably a refocus on the latter is probably where they want to be. Microsoft selling off down about 70, 80 odd cents in the after hours. That straddle came in right about in line. So there's your death by 1,000 cuts going in long premium from an earnings perspective as well. Of course, Microsoft never been a resounding premium buy going into earnings anyway, so I think you kind of know what you're getting there. And of course, Nokia and some other ones really not doing a whole heck of a lot either. So aside from those big earnings, we do have some coming up. You know, we talked about Facebook at the top of the show with those deep in the money puts. Someone could have been specking on the upcoming earnings announcement next week on the 23rd for good old Facebook. We also have Netflix on the 23rd, and then we'll have to bring Andrew on for the 24th because Zynga coming out, baby. Got to get Andrew's perspective on good old Zynga. I'll never let that one go. It's just too fun. That is Andrew's Cisco. Let's just say that for Uncle Mike. And then last up, we have, of course, Amazon on the 25th as well. Another fun one to watch. Aside from all those earnings, what are you guys really paying attention to going into the end of the week and the weekend? Mr. Tusaw, we'll start with you.
Well, I mean, I don't know if it's necessarily the weekend, but still, once again, I don't mean to sound like a broken record, but I think the debates are something that you need to take a look at. It seemed like a non-event, the one with which we had this week. There's a lot of people watching our webinar, so I think that kind of took away some of the ratings of that debate. But
yes, that was it.
I think it was.
The KYO webinar train derailed the debates. I love it. That's a headline.
Yeah,
right there.
That's what I think it was. Honestly, we had about 17 million people on our webinar. Well, maybe a little bit less than that, but yeah, I think that just the final debate and then just listening to the candidates sling mud at each other for the next few weeks, going into November 6th.
It is scary that we're getting that close. It still seems so far away in my head, but yeah, it's a few weeks away now, which is terrifying indeed. And Dave, what are you watching coming up for the rest of the week into the weekend?
Well, I think I'm a little more interested in the traditional, perhaps cyclical types. I'm kind of interested in GE, Caterpillar, and TXN are all reporting in the next few days. Kind of looking to those to see about the health of the economy. You know, everybody's focusing on the CMGs and the Googles and the Amazons of the world, but you know, these are the bread and butter companies. So kind of curious to see how they do, to see if they're a little light, you know, perhaps maybe a market pullback, a real market pullback.
And last up, Mr. Sebas, what are you watching for the rest of the week going into the weekend?
You know, I think I'll be watching how Google reacts tomorrow, and just gold. I think gold's starting to look really cheap in terms of the options. And that's about it.
You like legging into some GLD verticals, or what are you looking at?
Strangles.
Strangles. I don't see you as a strangle man, except perhaps with small children and things like that.
Well, take a look at gold. Yeah, take a look at Gold Vol, and you tell me that you don't want to buy premium.
Yeah, I'd imagine, you know, what we've seen in the past. I haven't looked at it recently. Are you starting to get some of that same ridiculous levels in the wings, or is it relatively?
No, I mean, it's absolutely insanely cheap at the money. In fact, since they listed GLD options, the vol's never been this low.
I think for a non-Andrew show, this is probably the most pushing of premium buying we've had on the show in a long time.
That's what I do. What we do now.
You guys at Option Pit, the degenerate premium buyers that you are.
No. We do a lot of premium.
You heard it first from Mark Sebastian. Buy all straddles going into earnings. You cannot lose.
That's right. That's right. Yeah, you know what? If people, I'll get that copy. I'll get that Goldman copy to you.
We'll put it in the show notes. That might be interesting. Might be a good subject to discuss and debate on an upcoming show, because I know a lot of our listeners will.
Vol Views discussion.
That would be actually. So maybe listeners tune into Vol Views.
Don, and
You'd light a fire under Don. Yeah, you know what? Send me that link and I'll put it in the show notes for tomorrow, and maybe we'll have some time. We'll discuss it. That's going to light a fire under Don. I like it.
That is actually the straddle. The earnings has become a very popular trade in the last year.
People buying them at OX.
People are actually doing it. Retail clients
buying or selling.
Mm-hmm. No, buying.
Really?
Straddle. Buying Interesting. The premium. Absolutely. On all of these. The CMGs and the Googles, of course, maybe they didn't get in today, but we'll see a bunch of it on Apple. Absolutely. Everybody's pricing this straddle.
You know, it's funny. I bet you a lot of those, the quote-unquote degenerate premium sellers have been shaken out with Netflix and the others, CMG, over the past year. So maybe you have a disproportionate number of premium buyers still in your audience right now.
Yes, and when they become a non-event, the earnings, then of course we'll have the we'll have them selling the premium.
They'll go to the dark side again. Well, thank you for that, everyone on the old All-Star panel, and thank you to all of you out there in the listening audience, including all of you who wrote in today. If you'd like to join us on the old show and become part of the mailbag yourself, then surf on over to theoptionsinsider.com. You can post a comment in our comment system on any of the articles, and we'll find it. And if it's relevant to our show, we'll pull it up. You can also shoot us an email, questions@theoptionsinsider.com. Just put a little subject line, question for Option Block, so we know which show you're talking about. Or, of course, you can hit us up on Twitter or Facebook. You can find us many ways and reach out to us on the old show. But, of course, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the old Option Block.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.